Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the euro currency. So you could see that actually through the whole week, as we were discussing the day by day, the changing of the situation, you could see the whole week performance was really very slow. So I wouldn't talk even on the high time frames. On the weekly and monthly chart, we do not have any significant changes. Overall context remains bearish. On long-term context remains bearish because on the weekly chart, trend has turned bearish and market right now stands below yearly pivot point. So just giving a hint, some early warning that the sentiment might be changing in the bearish side. By taking a look at the fundamental background, we see that things that we had discussed without previous couple of weeks now is becoming reality. So if you remember, when everybody were in an euphoria on the expectation of the first rate cut in March, we said that it might happen, and it seems that it will happen, that the Fed will pass the European Central Bank ahead and in the first rate cut, so and put it on the first hit of the currency devaluation due to the changing of the balance between interest rates. With the recent turmoil on the real estate market, as you heard about the Pendebrief Bank in Germany, it seems that the problems in the European Union are rising like the snowball, actually. And today we have discussed this moment, and also some news on the forecast from the CBO on the perspective of the United States economy. So it's very important because it will discover some things of the dollar behavior and statistics that we should get for the year. So I think that this will be interesting to read and come to conclusion, just improve our forecast and just get some more background in our suggestion that indeed it seems that European Central Bank will cut the rate first than the Fed Reserve, and it might happen even sooner than everybody thinks. So from that standpoint, so this is first fundamental reason for the strength of the United States dollar. Second reason is, as we discussed last week, that we suggest that statistics United States right now is gently adjusted. So especially in the big numbers such as gross domestic product, payrolls, inflation, everything is done to keep dollar strength and to create the vision of the prosperity and stable economy, improvement, and so on. It usually happens in election years. And we think that this important work will continue. So these two factors suggest that currently is really very minor chances exist that dollar will lose its advantage. And from that standpoint, despite that, well, here we just talked about the possible head and shoulders, really still stands unresolved. Whether it will be harmonic head and shoulders before downward action continue, or market will just after minor retracement will just keep dropping, it still stand on the table. We do not know. Particularly speaking, we do not know what the real factor might push the euro currency right to the 110 level. What should happen for that purpose? Currently, it seems that we will get minor retracement, moderate retracement here, and market could just keep going lower. Because this now, if you take a look at the intraday charts and here on the daily, it's very small pullback. In fact, you could just draw it as some kind of the minor flag consolidation you can see on the market. Usually flag consolidations near the support area indicate some building on energy before breakout, so it mostly bearish continuation pattern. And especially it is important just because you can see so weak reaction right on the support. And don't forget also that this is OP target. This is our minor ABCD pattern. Oh, sorry, hand shoulders pattern on the follow time frame chart. If you remember these hand shoulders we were trading 2 weeks ago. This ABCD, this is also the OP, so market has completed stance and agreement. Usually you could suggest some strong pullback, but you do not see it in euro currency. This is also the signs of weakness. On the lower time frame, despite that our training plan mostly is done well, just because indeed for the whole week market was climbing higher by minor steps, but every day. But this pullback in general, you can see, stands very small. So by taking a look at the hourly chart, you could see this is just 30% pullback. Currently, euro currency still holds valid bullish context on the intraday charts. Yes, it was not able to break this level on Friday, but it was able to stay above the 618 level on this pullback. And well, that led us to suggest that probably it could try to complete the OP around 108.10 area, which is also agreement with the 50% level. As a result, we could get a kind of the godly steeple to sell later in the next week. And in fact, we're coming to an area between the 108.10, whereas will be OP and a target of the double repo pattern. If you remember the 50%, it's minimum target of the double repo, and confluence area, it's 108.30. This will be the first area we'll start considering taking the short position. So we'll see what the market reaction will be, what patterns will be formed. If we will not change, we will not see the changes in nature of the price movement. If it will remain the same choppy, bubbling, without any thrust negation, something of this kind. This might be the good area to consider taking the short position, because the pullback to the 30% resistance of this downward action, this will be enough for reaction on this target, supposedly, and downward action could be established. So that in towards our training plan for next week.